Good Tuesday morning from Yahoo Finance's New York City headquarters studios. I'm Yahoo Finance Executive Editor Brian Sozzi. We are only 2 days out from Yahoo Finance's big annual Invest event on Thursday. It'll be a huge day of market-moving conversations with everyone from the Bitcoin king, Michael Saylor, and then you have the bells on Wall Street, to the master of activist investing, Starboard's Jeff Smith. But before all that fun kicks off today, or Thursday morning, I should say, we do have open markets, an ongoing government shutdown, and AI stocks still trying to find their sea legs after last week's big sell-off. Let's get down to the NASDAQ and check in with Brooke DePalma. Brooke.
Good morning, Brian. Right before the opening bell here, we're seeing a bit of a mixed picture on the street ahead of that 9:30 open. Right now, the S&P 500 futures down more than 0.2%. The Dow down roughly flat, actually, and the NASDAQ seeing a bit of downward momentum, down about 0.5% as well. As you scroll through, this has been quite the week. We got that rally on Monday. We did have the S&P 500 see one of its largest single gain days in a month. It was up about 1.5% at the close on Monday's trading session. And now we're seeing some momentum, or rather it flat, and the NASDAQ seeing some downward momentum as NVIDIA and other AI players see a bit of a tick lower this morning. Also, the Dow holding on to momentum there, up about 0.2%. I do want to get right to trending tickers because we are seeing CoreWeave see a bit of a decline at the open here, down more than 9% after the company really surprised the street, beat expectations for its quarterly results, but that 2025 annual sales forecast was below Wall Street's expectations. I know we'll get into more there, but at the open here, we are seeing a bit of a sell-off, down more than 8%. I want to take a look at the NASDAQ because that's where we saw lots of momentum yesterday's trading session, lots of excitement, but now we're seeing a bit of a pullback this morning. NVIDIA down more than 2%. Tesla also down nearly more than 1.5%. Those were some of the gainers on Monday's trading session. But there are some bright spots within this. T-Mobile seeing a bit of a pop at the open, up 1.6%. Also, we're seeing Gilead Sciences up more than 1%, but a bit of a mixed picture here when you do look. The Dow, though, holding on to some momentum there with some top gainers being Home Depot ahead of their report next week. Also, Clorox seeing some momentum, as well as Merck & Company up about 1%, but very much so a mixed picture here at the open. We're seeing the Dow, though, holding on to some momentum here, while the NASDAQ and the S&P 500 seeing a bit movement lower at the open here. Back to you, Brian.
Brooke, is earnings season ever going to end, or it just keeps going, just like one big blob?
It keeps going. It keeps going. It'll be till December, Brian, so buckle in, because we're in for a while here.
I'm buckled in, Brooke. All right, thanks so much. All right, here are 3 things I'm tracking out of the gate today. CoreWeave's quarter was tight last night, but the outlook, not so tight. Solid earnings call. I think the guidance and slowing sales from TSMC this week are driving fresh concern on the AI trade. The last thing the NVIDIA bulls want to see ahead of earnings next week is this. Early backer SoftBank has sold its NVIDIA stake for $5.8 billion. SoftBank says the sale has nothing to do with NVIDIA, as you would expect SoftBank to say. The U.S. Senate passed legislation Monday night to reopen the government, but U.S. airports are still a hot mess. Airline stocks are trying to rally back, but no go just yet. So a lot to get to here today. On the opening bid roundtable, Lou Bassanese, Prairie Operating Co. EVP of Market Strategy, alongside Yahoo Finance senior reporters Brooke DePalma and Jennifer Schonberger. Jen, let me come out to you here. What's the latest that you're hearing and seeing regarding the shutdown?
Yeah, so the longest government shutdown in history looks like it is finally winding down. The Senate voted last night to reopen the government with 8 Democrats joining Republicans, though we did see Republican Senator Rand Paul defect. Now it goes to the House, where Speaker Johnson is teeing up a vote on Wednesday. That is because today is a government holiday and it is taking time to get House members back to Washington. President Trump has said he will sign this bill, and so we expect the government to open by Thursday, likely, if not Friday. And by the time we get to that point, we are looking at a government shutdown that will have ranged about 6 weeks long. It is expected to hit GDP this quarter, but then we will see a rebound in the first quarter. And the Congressional Budget Office had done some back-of-the-envelope math, and had estimated that a 6-week shutdown would amount to a 1.5% hit to GDP in the fourth quarter, but then we would see GDP rebound to 2.2% in Q1. Now, aside from the hit to GDP, as you know, we have been lacking major official government data that investors depend on to assess the economy and that the Federal Reserve depends on to set monetary policy. And so we will likely see the September jobs report released in short order because that had already been collected as the shutdown had come upon us. However, that data is going to look a bit stale at this point, and it is going to take time to collect new data and put that out. And we have had a government shutdown. There have been a lot of furloughs. So the economic picture is likely to remain foggy here for a bit longer.
Lou, if you told me 6 months ago the government was going to be shut down for 40 more days and the markets were going to continue to trend higher, I'd be like, I don't know, Lou. I'm not so sure about that call. But what has surprised you over the past few weeks?
Yeah, what surprised me is how long this has lasted, right? Most markets react to, shutdowns as political theater, not a real risk. And the markets 12 months later almost invariably are higher. This one, though, K Street really started to hit Main Street. And this is what I'm really concerned about is that GDP hit. How does it affect the psychology of the consumer when we have a swath of Americans who were going to work without pay? Other Americans have to look at that and go, all right, what other government services that we rely on could hinder the economic growth. So I'm going to be really careful watching if there are any ripple effects. I mean, you see fast casual restaurants like Chipotle struggling, other names in that space as well. Is the consumer really finally hit its breaking point? That's what concerns me the most. But again, I don't trade C-SPAN clips. I trade earnings and cash flows. And the good news is, you brought it out, earnings season is well underway. Earnings have been, by and large, really strong. So I think that creates a lot of opportunities in this market, even as we hit new all-time highs.
Yeah, I'm glad you mentioned those fast casual chains, Lou. We got a story trending on our site right now talking about slop bowls. I guess that's a new term. I guess I missed the boat on that one. But let me just stand on your point there regarding the consumer, Lou, because I share your concern on where many households are. As this data comes in, even though it is backward-looking, how big a risk is it to the market here that is still at record highs, that some of this data may not be good?
Yeah, I think everyone's going to just put all their eggs in the basket of the Fed cutting rates, right? Expect it to be not good. It's going to paint a picture of a very weak labor market, a consumer that's putting more on credit cards on an absolute dollar basis. And everyone, I think, we've been trained to expect the Fed to cut into that. So we're going to get another 25 basis point cut. I know one of the Fed presidents was suggesting 50 in December. I don't see that. I think they continue on that trend, and that provides the easier spending environment for consumers. I mean, I say this, I'm always looking for the consumer to slow back and slow down, but we haven't seen it historically. I think we've had one period where we've had 2 quarters of declines quarter over quarter in consumer spending. And that was, through the financial crisis and then COVID. Outside of that, the consumer is surprisingly always resilient. So just paying attention to that to see if this is one of those anomalies.
Brooke, what are you keeping an eye on?
Can I jump in a second?
Yeah, of course. Go ahead, Jen. Go ahead.
So I just want to build on Lou's point, because we have not seen, even though we're going to see a deal to reopen the government, there is no deal yet on those healthcare premiums. And to Lou's point, we are in a K-shaped economy, a bifurcated economy, where the higher end consumer is doing well, but the middle to lower income consumer is increasingly doing poor. And so if they're going to see their healthcare premiums increase, that is going to put further pressure on consumer spending, which has held in here. But I think that is another fly in the ointment and some ripple effects here from the government shutdown.
Yeah, Brooke, these are some really good points. I was talking to a well-known economist yesterday, and he seems to think that the low-income consumer, they're just flat out in a recession.
Brian, what I'm looking out for is results from Walmart and those dollar stores. Those are the companies that really gave us an inside look, and not only the low-income consumer, but how the high-income consumer is behaving in this environment, that they're going to these stores to seek out value, but they're still ultimately spending, but they're seeking out lower prices. And this really just goes to show it's a key insight into this K-shaped economy that we're seeing, where that low-income consumer is being extremely conscious and really mindful of where exactly their dollars are going. Even a government worker that I met over the weekend, he was telling me that for some of his colleagues who are living paycheck to paycheck, these past few weeks have been really detrimental to their, ability to really continue to pay mortgages, pay these bills that they have, especially with kids in college, whereas others might be doing just fine in this. But definitely choiceful, mindful heading into this holiday. But this government shutdown ending this week, especially ahead of that holiday, will be key for these retailers, especially as they want to see these consumers come back to their stores.
Before I get onto the AI topic, Jen, let me go over to you real quick. Lou mentioned a potential 50 basis point rate cut. I mean, I've seen some chatter of that too as well. The Fed, that decision, comes December 10th. Is that completely off the table, 50 basis points?
For it to be on the table, let me put it this way, Brian, we would need to see a drastic reduction in jobs in these government jobs reports that are coming out. Right now, Fed officials that I've been speaking to have said, look, there's continued softening. There is the potential for further fragility in the labor market, but this is not an emergency. So that keeps them more on track for a 25 basis point cut as opposed to 50. You know, I did speak with Fed Governor Stephen Myron last week on the back of that ADP data. That was before we got the Challenger data, which showed some major layoffs, the highest level since 2003. And he seemed to say on the back of that ADP data that, yeah, we're continuing to see further softness in the job market. The snapshot of the economy has not changed that much, and the median was for 3 cuts this year. So if that is the case, then he would expect a reasonable scenario for another rate cut in December, but more probably on the order of 25 basis points at this point, not 50 basis points.
Yeah, that Myron interview, Jen, that was great stuff. I encourage everybody to go check that out on our site. Lou, let me get back to you on the AI trade, CoreWeave. Are investors missing important signs? We had CoreWeave guide not so great for their current quarter. TSMC earlier in the week showing slowing sales. And then, out of the blue, people wake up today and say SoftBank is suddenly selling its $5.8 billion stake in NVIDIA. I mean, 3 makes a trend in my view.
Yeah, 3 makes a trend, except I think CoreWeave's an outlier because if you look at them, they were really a reseller. I came into this AI utility energy trade through Core Scientific, which CoreWeave was trying to acquire because they would get rid of their debt and bring a lot of inventory in-house, low power. If you look at the rest of the trade group like Wolf and IREN and Cipher Mining, they're announcing deal after deal. I think the growth is still intact there. SoftBank, for me, is less of a warning sign and is more of a victory lap for SoftBank. I mean, they've traditionally done private investments. I don't see any demand destruction occurring across the space when we had good results from AMD, and then all the chip makers and then all the Mag 7, the hyperscalers, increasing their CapEx for data centers. So to me, that points to stronger demand. The key question is, does that translate into profits at the end of the day for these big hyperscalers? And that's still to be determined with this model kind of playing itself out.
Brooke, I know you've been tracking CoreWeave price targets this morning.
Yeah, what we're seeing is CoreWeave move lower this morning. And certainly when you take a look at the YF tools on our site, if you look to analysis, what I'm seeing there is a PE ratio of about, let me just scroll down really quickly. I can't pull up the exact number right now off the chart, but
it's
what
just
I'm
exorbitant,
seeing
Brooke.
is the stock.
It's exorbitant. It just
we
says
do have quite a lot of
exorbitant.
analysis diving in, but we're seeing this stock trend lower. If you take a look over the past few weeks heading into this report, we also did see a bit of a sell-off here. It's down more than 20%. It's now moving lower this morning, down more than 12%, or rather nearing that 12% mark. And over the past 3 months, as you can see on your screen, it's down more than 30%. And we were even chatting about this yesterday, Brian, is that heading into this report, this company needed to prove those high expectations given where it is trading. And so there was high expectations, as I said, back in August when the company reported, and it didn't exactly hit Wall Street's mark entirely. That stock dropped 21% the following day. Now this morning, we're seeing a similar reaction. The 2025 annual sales forecast is not exactly what the street wanted. The CEO blaming a third-party data developer being behind schedule, and that's what led to their lower sales forecast. And yet again, it didn't succeed in completely blowing the street's mind, and that's why we're seeing the stock move lower again today. And we're hearing from so many sources that these companies really need to prove outstanding earnings growth, and if they don't, then the street was not necessarily impressed.
Good stuff indeed. All right, Lou, Brooke, Jen, y'all are sticking with me. Straight ahead, I am unpacking the trade on Delta in light of the government shutdown, and the opening bid roundtable is in search of the next big tech catalyst. We'll be right back. Welcome back to Opening Bid. Paramount in focus after its first earnings report since merging with David Ellison's Skydance in August. While the market likes Paramount's promise to cut $3 billion in costs, up from $2 billion previously, the quarter was by no means a slam dunk. JP Morgan analyst David Karnofsky, reiterating an underweight rating on the stock, or the equivalent of a sell, says the analyst, while we're encouraged by the company's vision, there remains a significant amount of execution across direct-to-consumer and filmed entertainment, the benefits of which may not be visible later into 2026. We look forward to learning more, but remain underweight, cautious of the near-term cash outflows and still long-term risks at TV media. All right, let's hit my stock of the day. That is Delta Airlines. I want to sign Delta is one of the best run airlines in the game. Just check out its stock price during the government shutdown. Shares are up about 2% in the past month, which is good considering the increasing chaos at America's airports. But the reality is Delta is one of the best run airlines around. The company's third quarter brought record revenue and a full year guidance lift. It's building more premium seats into its new planes, and it has a well-regarded profit sharing system for employees. For all of its strong fundamental characteristics, I'm really baffled the stock only trades at 7.8 times estimated forward earnings. The broader S&P 500, because of all its moves in AI, trades at about 22 times. Let's get the round table to weigh in here. Lou Bassides, Jennifer Schomburger, and Brooke DePalma. Lou, coming to you. Any interest in a well-run company like a Delta trading at about 7.8 times forward earnings?
I start to get excited because that seems so cheap relative to the S&P 500, but then I remember a well-run company in a not so great industry is not an attractive investment. I mean, to paraphrase Warren Buffett, I mean, the airline industry is a great place to incinerate investor capital and shareholder capital. It's a notoriously difficult business to run, low margins, akin to, grocery stores. And then coming from the oil and gas space, I don't believe the tailwind of low energy prices is going to persist long enough to give this stock liftoff. I mean, it actually could trade lower from here. If you look historically back in the COVID days, we were trading at about 6.1 times forward earnings. So it could get another 20, 30% cheaper before it even lifts off from here on strong results, no doubt. I don't want to take away from the management team there. Doing a great job in a really tough industry, but it doesn't get me off the sidelines with capital.
Jen, flight schedules have been incinerated too.
Yeah, that's right. And I just want to say, to Lou's point, I've always viewed airlines as sort of trades as opposed to investments because it is such a cost-intensive industry. But to your point, while this company has had some sunny earnings reports, it's this government shutdown that is creating a cloud over not just this airline.
I like that, Jen.
But yeah, you like that analogy? But other airlines as well, right? Because as you said, the government has canceled flights at 40 of the nation's busiest airports because of the shortage of air traffic controllers. And lost flights translates to lost revenue and lost earnings. And while it looks like the government is likely to reopen towards the end of this week, airlines are not going to be able to get flights back on track instantaneously because these flight maps are very complex. They're going to have to untangle these. They're going to have to reassign staff. And so we could see some time before all of this gets back into place. At the same time, there were air traffic controllers who said, you know what, I've had enough of this. I'm just going to retire. So it looks like the government's going to have to, and airports are going to have to restaff those folks as well. So there's going to be a couple of stumbling blocks here before we get things back on track.
Brooke, I dare you to try and top Jen's pun there. The floor is yours.
I mean, certainly, all I see, as you know, Brian, is sunny skies while we're flying over, and so does the street here. Over the past few months,
this is making my day.
we have seen some momentum come to a company like Delta, and back to the consumer conversation that we're had. But that premium consumer flying first class has really supported the company over the past few months. And if we do look at the YF tools on our site now, taking a look, as you mentioned, Delta now trading at a forward PE of about 7.8, and I want to point out too that American Airlines as well as United are also trading around similar PE ratios. But then you have a company like JetBlue, and they're trading a forward PE value of about 53. And so there's definitely lots going on right now. We have these companies that are certainly seeing some momentum into the back end of the year, trading at these sort of valuations.
We should be charging people for this Delta analysis. Good stuff here. All right, we're speaking of Delta, we're nearing a big day here at Yahoo Finance, our annual Invest event. Our teams haven't slept in months as we put this special one-day investing celebration together. This Thursday, November 13th, starting at 8 a.m. From our New York City studios, we got a special full day of live global coverage of the key themes driving the market, AI, crypto, and much more. with the top people in corporate America you'll want to hear from. You just heard us breaking down the Delta trade. Well, I'm happy to say I'll be talking to Delta Airlines CEO Ed Bastian at Invest. Ed has been the CEO since 2016 and is a 25-year Delta veteran. He's just one of the big names planning to be in attendance. Don't miss Yahoo Finance Invest live all day on Thursday, November 13th. Save the date and tell all your friends. All right, let's now turn to our question of the day. Investors are still split on whether or not the AI trade is currently in a bubble. But putting that aside for a moment, what is the next major catalyst for the tech trade? Lou, over to you.
Yeah, I think it's more of the same, right? Strong earnings growth from the Mag 7. If you look at it separated out, they've been reporting, 20% plus earnings growth quarter after quarter for the first 3 quarters of the year. Looks like we'll get more of that when NVIDIA reports. But for me, I mentioned it earlier. I think the key is seeing that transition from huge CapEx spending to profits being generated, not just from chips, but from the solutions that these chips are getting put into. So we want to see companies, OpenAI may become public in 2026. What's their revenue and profit look like? What are the other AI platforms generating in terms of revenue? Because for this really to work out, you've got to, I think I saw a stat where you got to basically charge every Apple user about $30 per month to use AI for this to be a viable business model. And that's to be determined. I think we really need to see that focus move from the chip spending to the actual revenue for AI platforms. And then also solution providers. I see a lot of opportunity for AI in the healthcare space. On the big cap side is a company like Tempus AI that's using their testing business to develop really innovative ways to get people in the right clinical trials. I think you're going to see some innovative solutions there. But right now, I think, like I said, it's more of the same. More earnings growth, more chip sales, more AI utility names doing big deals with the Mag 7.
Jen, this is in your wheelhouse, but one potential catalyst for tech could simply be one more rate cut before year end.
Absolutely. That was my thought process as Luke was speaking. I think if you continue to see the economy, you don't see it go into recession, and the data sort of holds in with what we've been seeing over the past month or so on the private sector data side, where not much has changed, then and the Fed is on track for another rate cut, that creates a tailwind into the end of the year and is going to help the Mag 7 and the big tech names, which continue to be a show me story.
Brooke, what do you think could be a catalyst?
Well, I was reading a few sources' notes this morning, and what we're really hearing is, 1, this government shutdown needs to end. 2, we need to get that return of that government data, as Jen was just pointing to. Also, this tariff turmoil that we've been seeing. Bank of America, Vivek, analyst there, saying this all in a note. He also went on to say that if those macro factors are out of the picture, tariffs, government shutdown, we get back that data, then we can sort of shift and refocus back on this AI spending cycle and just better, support that momentum moving forward so that investors don't have a side eye on all these other distractions moving forward.
No side eye. All right. Good stuff there on the AI trade. Thank you, Lou, Brooke, and Jen for joining me this morning. Really appreciate it. Coming up, Julie Hyman has you covered on Market Catalyst. Don't go anywhere.